guys, it's Linton here from Greenbox Markets. We're going to do something a little bit different to the norm today. And what I'm going to do is I'm going to show you from the start of 2017 what our strategy would have achieved on the Euro US currency pair. Now, I've chosen the Euro US because it is the most popular currency pair to trade, and it suits my strategy development as well. So I have based a lot of my strategy development on the Euro US, and I've decided to use this as an example to show you how the strategy works. Now, the moving averages that are on your screen, I'm not going to give you the values because obviously that's a strategy that you can purchase from us. So you can buy either our training manual, or you can attend our training either online or in the office. So here was the start of 2017, and each green number you can see is a profit, and beneath the number is the percentage of account that was achieved with that trade. So 2.93, then 3 trades of 1%, or 1 of 2%, and then 2 stop losses. Now, I don't have the percentage of the stop loss at the stop loss, and that is because we risk 2% of our account per trade, which means that every red number you see, like this one over here, which is a stop loss, was a loss of 2% on the account. The green numbers vary, obviously, because our take profits are at different levels. And what we're aiming to achieve is larger profits than losses at the end of the day. So the reason I'm showing you this is because I find that there is a very big flaw with how traders look at their strategies. Firstly, I find that they don't backtest enough data. In other words, here I'm showing you 2 years, and I find that a lot of traders are only looking at a month or a couple of months to make a decision on whether or not their strategy is effective. And what happens is when it's going well, you know, the strategy is fantastic and everybody is feeling great about it. And all of a sudden you go into a period where you have a few stop losses in a row. I mean, I've had periods where I've had up to 10 stop losses in a row. Now, that's very rare, but it does happen. You know, and it's very difficult through those times from a psychological perspective to think that your strategy is still okay. And that is the thing that we're trying to explain, and that's the thing that we focus on, is market conditions change, and a strategy won't win all the time. If you meet a trader that tells you he's accurate 99% of the time or 90% of the time, I'm telling you to run a mile from that trader, because it's impossible to be accurate that often. Your strategy will be in tune for certain market cycles and periods in the market that are conducive to your strategy. You know, so there are going to be periods where you have a lot of stop losses in a row. And what you need to do is teach yourself from a psychological perspective that that is okay, and that's part of the business of trading. It does happen. You know, you go through periods where there are a lot of stop losses in a row, and that is the psychology behind trading. If you can master psychology of trading, you will be in a far better position than the traders who get nervous and they get upset and they get worried about a number of stop losses in a row and start changing their strategy. Because after all, a strategy is only as good as the set of rules. And if you keep changing the set of rules, you can't really call it a strategy because you haven't tested it and it's not proven. You know, if you make a change to your strategy, what you need to do is you need to go back again, like we would do here, back to the start of 2017, and retest the entire 2 years again to make sure that what we are doing, is it better or worse for the strategy? You know, that's the only way to really know whether the changes you make to your strategy are worthwhile. And I tend to find that traders will make a change to their strategy, look at a couple of trades going forward, take a few profits and think, man, that change is fantastic. And then all of a sudden the market cycle changes and market conditions change, and there's a lot of stop losses in a row. And perhaps those stop losses could have been averted by doing the right kind of research and testing your strategy back far enough. I mean, as we speak, look on the screen here. We went through a period where there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 stop losses from 16th of May to August. Now, that is quite a period of time, and with a lot of stops in between a couple of profits. But you know, I would have been very tried during that period to think, man, is this strategy still working? Is it something that I need to keep trading? And all of a sudden you come out of that period, which was a very volatile sideways period, and that does happen, and the initial profit banked is 4.84. Straight after that is a 6.15% profit, another 2 1%. one stop loss in between. Then all of a sudden, 1, 2, 3, 4, 5 profits again. So yes, there are bad times on the market, but from a psychological perspective, if you can master those bad times and you can teach yourself that that is part of your cost of business and you can move forward from that point, you are going to be in a far better position to have a strategy that works at the end of the day. Just like any business has running costs, you've got your telephone to pay, you've got overheads, you've got rent, you've got employees. You've got to look at your stop losses as the cost of business. There is no strategy that can be right and can be accurate all the time. It's just not going to happen. There's no holy grail in trading. So what you need to do is get to a point where your profits outweigh your losses on average. And that is what we do with this strategy. Let's just have a look at the end results here. I've already added everything up. From the start of 2017, on this strategy that I developed, and bear in mind that this is only one currency pair, there was a total of 31 losses. Okay, now remember I said that for every loss, it was a 2% of account because we risk 2% of our account per trade. And that totals then at 62% loss. Then we look at the profits. More than double, so 66 profits versus 31 losses. Now, each profit, the percentage varies depending on which target was achieved. And the total profit percentage is 139.5%. So if we subtract the 62% negative trades from the 139.5% positive trades, we get a total profit of 77.5% for roughly 2 years, which gives us an average of approximately 38% per annum. And that is only on one currency pair, guys. So imagine if you are trading 5 currency pairs or 10 currency pairs and achieving similar results. That's very, very powerful. If you look at financial institutions, most of them offer you sort of in the region of 6 or 7% here in South Africa annual returns. And if you're lucky on a fixed deposit, 10%. I know a couple guys getting up to 12%, which is really, really good, but it is nowhere near 38%. And this is only on one currency pair. Now, granted, this strategy works really, really well on the Euro US, and there are currency pairs where it doesn't work that well, and you might only break even after 2 years. So what we're doing at the moment is we are, after my final set of changes to the strategy and backtesting, we are now selecting the optimal currency pairs to trade this strategy on, and we will be doing that going forward. So this video has shown you over the last 2 years exactly what can be achieved if you stick to a strategy and you don't just change the rules because market conditions change. You've got to stick to the rules of your strategy. So if you're interested in understanding the exact entry, stop loss, and take profit levels for this strategy, you can subscribe to our trading signals, or alternatively, you can also attend our training. Purchase the manual or attend our training online, one-on-one with myself, or in workshop format or classroom format at the office. Guys, there is definitely money to be made on the Forex market. It's not a get-rich-quick scheme. And that is something that we stress to our clients all the time. I speak to guys and they tell me, oh, anything less than 20 or 30% per month is just not good enough. And that is absolutely ridiculous. If you can get to a point where you're averaging even 5% per month on your trading account, and you can do that over time, you will be absolutely astounded at the results if you do compound interest results. Now, we do also have a compound interest calculator on our website that you can go and have a look at under the learning center on our website, and that'll give you a really good idea of what I'm talking about. I will put the link in the description of this video below. My contact details are in the description below this video. Please feel free to contact me for information, or if you wish to purchase this strategy, you can also do it via our website, and the link will be in the description below as well. I hope this helps you understand what it is that we're trying to do when teaching our clients and also with our managed accounts. Have a great day. Cheers.